Welcome to October's Investor Office Hours webinar with Royalty Exchange. As usual, this is an opportunity for any investor on our platform to call in and ask any question that you might have about how the platform works, about how royalties work, about royalty investing, etc. Here, my name is Anthony Bruno. I'm the Director of Communications, and with me here is Rob Bernard, our Chief Counsel, and Ryan O'Connor, our Chief Financial Analyst. And that's going to be our panel, as it were, today. So real quick on how all this works. Basically, at the bottom of your screen, you should see a little Q&A button. The Q&A is how we handle the incoming questions and whatnot. So if you do have a question, just type it in to that using that function of the webinar service, and it'll put your question into a queue, into a line, and we'll address them as we go through the call. It's the easiest way to do so. There's also a chat feature. I would ask you not to send your questions in via chat. It's actually a lot harder to monitor what's coming through chat than it is through the Q&A. So please, if you have questions, use the Q&A feature. We will commit to answering every single question that we are asked until there are none, and that's how long the call generally lasts. We also have a few questions that were left in advance when you registered, and there's a couple, maybe a handful of those. So we'll address those first, and then we'll switch over to the to those that were left in the Q&A. So that is how we operate these calls. So again, thanks for joining. I'm going to start with actually just a couple. We have a few things we like to kick off these calls with. Usually new items, new announcements, things like that. So we have one or two that we were going to go over with first. I guess Rob wants to kind of start us off today with a smaller item. Rob, you want to give us the first quick update that you had? You were on mute, Rob.
This went out in the investor marketplace update today, but we've actually linked up with a company called altoira. They're an IRA custodian. We've had some investors come to us and say, hey, can you recommend any IRA companies that I could work with that you guys could recommend? And we it was kind of piecemeal, like really it's up to your IRA company whether they can work with us or not. Well, this company, altoira, specializes in alternative assets. And we're now working with them to where you can create an IRA through altoira. And we've been pre-approved through their system, and you can use that IRA to invest and sell any royalties on Royalty Exchange. So you can check the marketplace update email today for a little blurb about that, and that'll link over to also on our blog. We have some more information on that, and certainly if you have any questions, certainly feel free to reach out.
And so just real quick, is that the only way that someone could put royalties into a self-directed IRA, or can they continue to do if they have their own self-directed IRA already established?
If you've already have a self-directed IRA and Royalty Exchange has already been pre-approved with it, we've only done a handful of them to date. You can still use your other IRAs, but it's really kind of case by case on whether that custodian will allow you to do that through Royalty Exchange.
Okay, so you can, as long as your custodian allows it, but if your custodian doesn't allow it, then obviously we can't work with you. But this is one self-directed IRA custodian that we partner with that absolutely will.
Right.
So there you go.
That's right.
All right, great. There you go. I'll also note something. So Rob's referring to the marketplace update email. It's the weekly email that we send out, sort of summarizing what's on the platform and whatnot. We usually provide a little bit of news in that as well. And we'll highlight the fact that yesterday, I believe, was the latest ASCAP distribution. And the reason I point that out is because when that happens, we update the listings on the marketplace, the secondary marketplace in particular, with new financials. The last 12 months earnings in particular will change for any ASCAP distributed royalty on the marketplace. So if you haven't already, you might want to check any listings that you've had your eye on that you might be tracking. The financials behind that will likely have changed, and that should change how you make offers on those. And if you have an ASCAP asset on secondary marketplace that is listed and you have a list price on it, you might want to also check and update your list price based on how your last distribution went. So again, when the financials changes, the bidding and offer strategy changes as well. So just wanted to point that out. And then since we're talking about the secondary market, I thought I'd bring something else up. Basically, this is what we advertised in the email for this webinar, that we've got a newer type of listings available in what we have been calling the secondary market, which sort of belie the moniker secondary market, basically. So we've been adding what we call direct listings. Now, to date, the secondary market has been populated with assets that other investors have previously acquired on Royalty Exchange, most commonly through an auction, right? So as long as those assets were collected royalties through a public rights organization like ASCAP or BMI, we were able to relist those on the secondary market so that if you were an investor who owned it, you could entertain offers from other investors who might want to buy it from you. Or you could actively try to sell it by setting a list price and say, hey, I've collected what I want from this. Now I'm willing to give it up, and so on. That's been primarily that's why we called it the secondary market. Well, we've expanded that, and we are now adding listings directly from artists who come into our service to would otherwise go through an auction, which is what our normal format had been to date. But sometimes they don't want to do an auction for various different types of reasons. They just want to say, hey, I've got a very specific price that I'll part with this for, and I don't want to do an auction and hope that it gets to that price. I just want to say, here's my catalog and here's what I want for it, and they post it directly. So functionally, the listing works just like any other secondary market asset, right? Like you would from any other investor. You see the same data, you get the same information, make offers in the same way. But it's worth noting that the motivation of the seller is slightly different in that you're not making an offer to an investor who previously acquired this asset. You're making an offer directly to the artists themselves. I don't know if that makes a huge difference in terms of your bidding strategy or your offer strategy and whatnot, but it's worth noting that in many cases, people make offers to other investors on the secondary market and they get sort of ignored because the investor may not be interested in selling it. And so that's one of it's a common bit of feedback that we get. But in this case, it's an artist who is actually actively trying to sell it. So there's a little bit more of an engagement there, and that's worth noting. So let's see here. I'm actually going to try to share my screen for a moment and show you a couple examples of this. So here we go, live tech demo in process. So, all right, I think that worked. You guys all able to see this? Right, okay, cool. So here's what we have in the secondary market. And by the way, we're going to start referring to this just as the market in over time, right? Because it's no longer just secondary assets. And so what I've done is using if I remove filters for a minute, this is everything in the market, right? There's all the stuff that we mentioned from investors and others. Using the filtering feature, you could say only show direct listings. Okay, so now I filtered to just show direct listings. So these are the direct listings that are currently up. Again, these are all listings that are based on basically posted by other artists. And I'm going to show one. Actually, yeah. So this is one that recently actually sold. They listed it at 25,000, and as you can see, if you go to the offer history, you'll see that the offer started rather low at 8,000, and eventually was accepted at the list price of 25,000. There's another example here. Another one. This was originally listed by the artist at 185,000 for this particular catalog, right? And what you see is, again, some of the offers came in testing, right? Someone tested it at 60, another tested at 132, but eventually the offer came in at 164.9, which was below the list price, but the artist actually accepted it. So there is, this is still a market. There's still a back and forth offer and accept or reject activity taking place between these things. And so I think that's worth noting. And like I said, you still see the same information here, earnings history and whatnot, that you would with any other asset. So those are direct listings. Let me stop sharing here. We've been doing only a handful of these, and we're getting ready to announce a little bit more broadly in the next week or two, so that hopefully other artists would find it compelling, and you'll see more listings added to the market as we go on. So, Rob, Ryan, do you guys have anything to interject on the direct listings here? Did I get all that right?
No, I mean, I think you did a pretty good job, but I think it's important to highlight kind of how you showed that people are testing the waters or whatever it may be, so to speak, right? So like, as an investor, you want to look at it from the seller's point of view, right? Like this, in a lot of cases, is their life work. They put a lot of energy and effort into this. So, the list price in a lot of cases, maybe not all the time, but maybe a little bit more than what they're actually willing to accept, right? So it's important to have like a strategy of how you want to test that price over time. And I wouldn't, like, if you see a direct listing, I wouldn't assume that has a list price, right? I wouldn't just assume that that's the only price they're willing to sell it for, right? Like it's really important to kind of look at the financials, come up with a multiple that you think is fair, and even if that is below the list price, like it's still worth it to make a bid on it, as long as it's somewhat reasonable based on what you're looking at.
Right. And it's also worth noting that this is, again, it's not an auction. So you can get, you have to kind of make your best offer almost, it feels like, right? Because some other investor can take it away from you quickly. Even if in your head, like, okay, I might bid up to, 120, but I'm going to try at 80. Okay, you could try at 80, but another investor might come in and do that 120, and then that's it, sales over. There's no auction opportunity to sort of bid up past that, right? So you kind of need to think about that a little bit differently, it feels like. Would you agree, Ryan?
Yeah, exactly.
Okay. All right. So,
And
so yeah.
I'll just jump in there. Just a quick point is the price they listed at is a firm offer on their part. It's a legally binding offer for them to sell it to any investor who accepts that offer. So if you do find a list price that you like, and you accept it, that's the done deal. Same thing for if you're an investor and you're making an offer. If you make an offer, that's a legally binding offer. If the seller accepts that offer, then the deal has been made. So just want to make those points clear.
That's a very good point. So we say testing because we're testing, accepting and rejecting, but we're in the accepting category. It's no longer a test. It's very, very real. So thanks for clarifying that. Always good to have a lawyer on the call. So if you have any questions about direct listings or the market, please, obviously put them into the Q&A. But with that, we're going to switch over to the questions that were left in advance now and do the Q&A here. So the first question that came in advance was, can partial rights be bought and sold? For example, a 10% slice of publishing rights. And the answer to that is basically yes, but I'll add a caveat because I'm not sure the intent of the question. So what you see listed on Royalty Exchange, whether it's an auction or on the market, is whatever slice of that seller's royalty earnings that seller wishes to make available. That might be 10% slice of the publishing. It might be 100% of public performance royalties. I mean, we don't break out how much of what they own that they're selling because it kind of doesn't matter. It's just like, this is the royalty stream, this is how it earns, and this is how much, you could stand to make if you were to acquire it. What you're not getting, the percent that's not being sold, doesn't really factor into that, that part of the equation. So there is that. But so typical simple answer is yes, you can sell that. But if you're asking if there's a royalty posted on the site, can you only buy 10% of what's posted? The answer is no. All right, that would be securitizing it, and then that's a regulatory process that we would have to go through. That would cost a lot for both us and for you as investors and whatnot. So this is basically a complete sale. You as a buyer, you are buying completely what is being posted. Again, whether it's auction or market, you're buying all of it or not all of it. Now, occasionally we may have what's called a private syndicate where we'll have a very large catalog that we can break into units that you can buy certain shares of. We haven't not done one in a couple of years. I don't know if we'll do one. We may do one again soon. We may not, but that would be the only caveat around that answer. So hopefully that answers the question. Ryan, Rob, did I any more?
Yeah, I think you nailed it.
Okay, thanks. When Ryan says I did a good job, then I know I did a good job. All right. The second question that came in here is, how is the provenance of rights sold via the platform verified? So I guess that's asking, how do you know as an investor that the person selling that royalty stream has the right to sell the royalty stream, and you're not going to buy something that you're not going to be able to collect on later? I'll let our lawyer Rob answer that question because that's pretty much what he does.
Yeah. So what we do in every case, and this is for auctions or direct listings, before anything goes on the marketplace, is we'll connect with the distributor of that royalties to verify that who our seller is who they say they are, and that they own what they say they own. So in the vast majority of times, the originating seller is either the songwriter or recording artist. In those cases, they'll be a direct member of their PRO if we're selling public performance royalties, or they'll have a direct publishing agreement with their publisher, who's the distributor on that end, or the label if they're an artist. So what we do is we connect directly with either the PRO, the label, or the publisher, verify that our seller owns what they say they own, And then once we verify that, then that clears it to go to auction. Now, in the case of secondary market, we kind of become the passer of the chain of title. There isn't an actual chain of title, but once something is originated on our marketplace and we verify that the songwriter or artist did own it, then an investor purchases it. We know that they rightly purchased it. And then once it goes onto the secondary market, we can kind of track the flow of originating songwriter through current owner of the royalty stream.
Thank you. I think that's perfect. But let me just jump on just to ask a question that might be in people's heads, which is there ever an instance where we've done all that and everything is verified and accurate, but then somehow after the fact, after there's a transaction on our platform, can something occur that could interfere with that provenance of ownership, for instance, whether it gets split or taken away or anything like that? I mean, I don't believe it's ever happened, but I'm just kind of wondering, like in the pie in the sky, what if type questions, what's the process there?
Sure. I mean, there has been instances of people claiming copyright infringement for songs that were written 20 or 30 years ago, and oh, hey, this song ripped off Westfall Time song. Maybe if you've been following the Supreme Court yesterday, Led Zeppelin actually finally swatted away the case of Stairway to Heaven being copyright infringement. But yeah, so it can happen. Things can happen after the fact. I always say anyone can sue anyone for anything. And share changes can happen after the fact. The purchase agreement that you sign as a part of your deal protects you against the seller of any sort of misrepresentations that they make. So a lot of times those kind of instances would fall under that. But things can happen as far as share changes and infringement suits down the line that weren't foreseen at the time of the sale.
Okay, cool. It's worth knowing that it is rather rare. It's I bring it up because it is in the news in a positive sense yesterday. Well, positive if you are Led Zeppelin or anyone collecting royalties on Led Zeppelin's Stairway to Heaven. But those things do come up, so it's worth noting. Okay, so moving on then, finally, sort of a long question here, and I'm gonna try to condense it a little bit, but basically the question relates to doing the math on making a valuation for a royalty stream. The comment here says that it seems that the price many of the listings go for is equivalent to its value, which means there's no upside to buying it. And so the question is, can you explain the benefits of investing in royalties, especially if you aren't getting any kind of ROI based on my calculations? Now, we don't know what calculations this particular person is using to create a valuation, but I'm going to let Ryan jump in and explain a little bit about how the best way to kind of calculate these things and where the returns are. And beforehand, I'm going to make Rob very happy. Just note, we are not investment advisors. This is not investment advice, but we can talk a little bit about how we apply our calculations to these listings. So Ryan, with that, can you try to jump into that question a little bit?
Well, yeah. So I mean, it's hard to answer the specific question without actually knowing like what kind of numbers you're running or valuation is actually taking place. But I mean, and it really depends what type of asset you're looking at. So I mean, just I guess starting with a 10-year term, right? Depending on how you're looking at it, you have to factor in, your return of principal above and beyond with a rate of return to receive that asset. So, I mean, just broadly, it comes down to kind of what the asset is and what you're willing to accept as a return. So, I mean, if you have a growing asset, that's one way that the royalties may seem fairly priced, and it may look like there's no upside, but there is actually upside in the asset if the royalties are growing or whatnot. But I mean, I would look at it as you're receiving cash flow from an asset, right? You're getting cash flow every quarter, or every semi-annual period. So that that's one benefit to buying a royalty stream. There's also various other things, right? Where it's an alternative asset. One of the other main things for a lot of our investors is it's uncorrelated with other assets, right? So like actually adding this asset to your portfolio and maybe at a lower rate of return than you would like, but will actually improve your risk adjusted results, in the sense that you're adding an uncorrelated asset to the portfolio, making it kind of more diversifying your portfolio, as well. So, I mean, those are just a couple of the kind of the benefits of owning a royalty. Again, I mean, a lot, I mean, going back to our returns, I believe there's somewhere at least in the 10% return range is what our investors are earning. And I mean, that's just off the cash flow, right? That's not even considering the resale. And I mean, I would expect, as you know, the future goes on, I mean, you look at your alternatives that you have out there in the public investment space, especially when you look at fixed income assets, right? These assets are yielding way more than them. So I mean, I would expect them to increase in value, but again, I don't know the future, and we don't know if that will or will not happen. But so I mean,
go ahead.
No, I was going to say, so basically those are kind of the positives, in the actual upside that's there. Again, I'd have to see that specific kind of valuation and what you were looking at to comment more directly.
Well, but let's dig into this a little bit, right? So when they say, the price they go for, I'm going to interpret that as being the multiple, right? Because the price is completely dependent on how much the asset's actually earning. So let's just talk about the multiple for a second, right? I'm gonna look at its last 12 months earnings, and I'm willing to pay for them at a certain multiple over that, right? Some investors may have like a fixed multiple in mind. Okay, I'm not paying for anything. I'm not paying more than whatever 6x for anything. So with that frame of mind, looking at things that are going for 7, 8, heck, we've seen obviously they go well above 10 in certain circumstances. For an investor that has a fixed multiple in mind, that those sales are going for at or above the value for that investor's mind, right? So what are the pros and cons, or how would you address an investor who has like a fixed multiple that they apply to all listings in mind? How do they look at a listing in a way that might require them to adjust the multiple? And we've talked about dollar age as being one of the main metrics, but you mentioned earnings and things like that. So there's a way that just to kind of address that one, because that's how I'm interpreting this question.
Yeah. Well, so I mean, that really depends on the asset you're looking at, but right, like, so one thing in particular, so say you're looking at an asset and you don't expect those royalties to change over time, right? Say they're going to be the exact same payment you received in the last 12 months, say you're just going to get that for the life of the asset, right? Well, paying a 10 multiple, that's a 10% return, right? If you pay 10x, right? So that's the way to look at it. So, I mean, the baseline is to look at where you see the royalties grow. Are they going to, decrease? Are they going to stay the same, or are they going to grow? And then you can obviously change your multiple expectations based on that. And the most important thing of what makes a market is the difference in opinion that one investor has versus another investor, right? And that's what's going to create the market and drive those prices up. So I mean, you see things going over 10 times because most of the time those assets, and I stress most of the time, those assets are extremely old, they're very stable, or they're growing, and you can pay 15 times for that asset. Why? Because your other opportunities out there are very unlikely to yield those results, based on what you're looking at currently.
Okay, so the three factors to look at basically: one, age, what we call dollar age, for how long has this asset existed and generated royalties, and the longer time that is, the more likely we feel that it will continue to do the same in the future. So dollar age is sort of the prime metric that we always point to. The other two sort of ways to tweak that would be: one, looking at the trend rate. So are these royalties increasing? Are they stable? It's the same, or are they decreasing? And if they are decreasing, are they decreasing a lot, or are they decreasing in a very slow rate? So the rate of decay, basically. And so those are the three I'm sorry, and one other factor is the source of royalties. How, from what format of music are these royalties earning? If they're earning primarily from streaming on a dominant basis, it's considered, and Ryan, tell me if I'm wrong, that's considered a more stable, more valuable, because streaming is
more valuable. Yeah, definitely.
Still growing format that we have. But if it's primarily earning from radio, depending on how old it is, that's the key, right? Like, I mean, if it's a younger catalog that's still earning primarily from radio, you might expect that radio earnings they will fall, but they'll probably switch over to streaming if it's that longevity kind of song. That's what makes the dollar age so important to kind of judge between those metrics. But basically, you want to look at the source of earnings, and are those sources considered sustainable? So that would be my summation. Of that. Okay, great. So hopefully that answers that question, and then probably sparks several others as we go through here. So Switching gears, then I'm going to go to the questions that have been left since we started the call. So thank you guys all for leaving your questions. We're going to start rolling through them. Please feel free to add more as we go through. The first question is, do you guys collect from Sound Exchange? And if not, how should a purchaser pursue? So no, we do not. And the reason why is twofold. One, at this point, Sound Exchange, as their policy, they don't do reassignments of royalties to new owners. So if we did work with Sound Exchange, they are less agreeable to diverting a percentage of royalties from the artist to a new owner, and that we would need it for them to do that for us to be able to sell those types of royalties. So that's one. But two, and this is actually even more important. Even if they did, it would still be very difficult because Sound Exchange is in a very unique position within the music industry in that their job is singular to collect digital performance royalties for the sound recording, which is a small subset of what's earned. So as you know, or maybe you don't know, but if you're the sound recording copyright owner, you don't earn performance royalties from terrestrial radio. You don't get paid for that. You only get it on digital platforms like SiriusXM, Pandora, etc. So Sound Exchange is the entity that was created to collect those digital performance royalties from the digital services and pass them through to the sound recording royalty owner, usually right to the artist themselves, basically. So that's fine so long as Sound Exchange is the one doing that. But what you're starting to see happen is some of these digital services are creating direct licensing agreements around Sound Exchange with the services themselves. So like Pandora, for instance, is one that has done this. So if you were working with Sound Exchange and they were collecting and distributing those royalties, if the digital service decided to strike a deal directly with the label or whoever, then Sound Exchange will no longer be collecting those royalties. And while those royalties are still valid, they're still being collected and distributed, they're just being done so by a different entity than Sound Exchange. And then if you were relying on Sound Exchange to be sending you those royalties, you'd be left out of that collection loop. And that's a major concern. So that's one of the reasons why we don't do it. Rob, did I get that?
Almost, but you missed a pretty key caveat is Sound Exchange is only set up, and the Digital Millennium Copyright Act only carved out performance royalties for non-interactive digital performance royalties. So you just missed the non-interactive part. And really all that is anything that acts like a radio station, meaning you can't choose what the next song is. Anything that acts like a radio station but isn't actually a radio station, which is really mostly Pandora and then SiriusXM satellite
radio. Right. And iHeart, radio and those other types of things. So yes, I didn't get into the weeds of the interactive versus non-interactive digital streaming, which is a whole nother area of conversation we get into. But anyway, I hope that answers the question. Next question is how long are the royalties valid for? Robs, I've been doing a lot of talking since you jumped in. Why don't you talk about copyright length?
Yeah, absolutely. So U.S. copyright law has kind of been a mishmash up until 1978. So but anything created after or in 1978, the copyright is valid for the life of the author plus 70 years. And if in the case of multiple authors on one work, it'd be the last surviving author. So if there were 5 songwriters, the copyright in that song would be valid once the last songwriter passes, and then add 70 years to that. So the royalties track directly along with the length of the copyright, because that's how long you can monetize any copyright. And then once that copyright ends, the work goes into the public domain, and then anyone can use it for free, which means the royalties go away.
Right.
Yeah, and I would just be careful. On our website, we do sell stuff for 10 years. Although the copyright does not end after 10 years, your royalties will end after 10 years.
Thank you. I was literally just about to say that. So we do have different term-based options that you want to pay attention to as you look at the site. As Ryan mentioned, 10-year term is the most common term-based one. We do have others. We have a 30-year term, and we've done a couple of 20s here and there. Why they are different different ranges depends mostly on the intent and the preference of the seller, but also in some cases it's a way around certain restrictions. In certain cases, and I don't want to get super into detail here because it gets a little complicated, and I don't want to speak too long about minutia. But basically, there are some services that won't or can't transfer a royalty ownership for the lifetime of a copyright. but they can do so if there's like a time frame on it for some reason. And so like a 30-year term essentially functions like a lifetime term to get around some of those barriers basically and some of those complications. So that's basically why we have those things. So thank you for that. We have another question here. Why can the secondary market include rights outside of ASCAP or BMI? I will say that that's for now, it's that way, which I'll let the guys here maybe explain better than I could, but I just want to note that we are working on adding other types, very, very imminently actually, adding other types of royalty streams outside of just ASCAP or BMI. But I don't know, Rob, can you explain better why is it that that at least initially we were limiting to just ASCAP BMI performance royalties?
Right, and yeah, and it's really mostly because it's a tech thing. Is that every asset that's on the secondary market needs to be directly connected to the underlying distributor, so that when a new statement comes out, like yesterday when ASCAP paid, that those listings can be automatically updated. So there isn't a lag for us to have to go back and update the listings with new financial information anytime a new payment comes out. So it's really our tech capabilities to be directly connected with these royalty systems.
Yeah, basically, because on the market you can make they're up there indefinitely. Okay, they're not. There's no time frame necessarily to them. So if they are posted on 1 month and then 2 months later there's been a new distribution that changes their financials, the listing needs to be updated to reflect those new financials. And if we don't have a connection to that underlying payment entity so that the marketplace can automatically update with those financials, then it's not a fair listing. It's not fair to you as an investor to be evaluating something based on old information. And because there's so many in there, having to do it manually is just untenable, obviously. So as we're able to connect with more payment entities on an automated basis, once that happens, that type of royalty stream will then also be added to the assets that are on the platform, basically. So that's the short answer. And we do expect those will increase over time. I think it hasn't even been a year since we launched the marketplace, actually. And so we've already added many things to it. So we're moving along. It's just going to take a little time for some of the other entities to integrate. So next question. I am new to this. What does this typically trade for? Multiple of royalties, percent of lifetime. So I guess the question is, what are how much people generally pay on average for royalties and on these things? And so that's a very difficult question to answer. So I'll start. Ryan, you could jump in, but let me just start by saying that the multiple range that we see is vast. It very much depends on the asset itself and the type of royalty stream that's being offered. So on an average basis for a 10-year term, which we know is going to end in 10 years, typically you're looking, and Ryan will probably correct me, but they're going to look in the 4 to maybe the 5 range on average, but we've seen them go for 9, okay, just depending on how good the asset is. On a life of rights one, the average is around, I think, 8 or 9 on average, but again, it's this wide range based on the dollar age of the catalog and so on. I don't know that we've done an analysis yet of multiple paid based on dollar age, and that would be a lot easier to tell. But anyway, I'm gonna stop talking. Ryan's probably gonna correct everything I just said. So Ryan, explain.
Well, yeah. So I mean, I don't like to use averages in this kind of environment that we're discussing, but so as of Monday, covering the last year, essentially, the term advances have gone for about an average of 4.3 times, and life of rights 6.68 times. Again, that's just over the last.
It means almost nothing, though, is the thing.
Yeah. So, and why I don't like using averages is because, you're averaging out low quality assets with high quality assets, right? Like it's not really useful in this sense. It really depends on the asset that you're looking at, right? Like, if you're looking at
how much do cars sell for?
Yeah, exactly.
Are you buying a 1978 Pinto, or are you buying a brand new Ferrari?
Exactly, right. Or are you looking at a Lamborghini, right? Which is obviously way more than the average. So and that's exactly like why you don't want to use an average here. And it's, if you're looking at a high quality asset, and like, I don't know, like Warren Buffett would say, I'd rather pay a great price for a good price for a great asset than, a good price for a fair asset, right? Like the quality assets here you want to pay up for because they're going to produce that long-term cash flow, and they're going to provide you with, great results over time. So.
Right.
I wouldn't use averages by any means.
Exactly. And so, so yeah, I think that's the best way to look at it. Next question then. Sort of three questions, basically. How are royalties calculated? Who pays them? And how are they audited? Robert, I'm going to ask you to just give a quick summary without getting into the entirety of every royalty stream that's out there.
All right, fair enough. I was about to go for about 2 hours. No, yeah. So each distributor of the royalties is responsible for calculating the royalties that they are responsible for. So, say in public performance rights organizations like ASCAP and BMI, they have their own algorithms that determine the pool of money that they collect and then that they pay out to their members. And it's not always necessarily a one-for-one. So if you look at a stream on something like Spotify, you won't necessarily see a one-for-one, like that's $1 in my pocket. You know, it's really based on kind of algorithms that they are kind of closely held. But it really, so the company that is responsible for issuing the license is responsible for collecting the royalties, calculating them, and paying them out to their members. So then as far as the audit goes, then the member would have an audit right over their distributor. You know, often, almost always, if you're a songwriter and then you're collecting royalties from your publisher, you'll have an audit right in that publishing agreement. So it's really the entity who's responsible for issuing the licenses is the one who is calculating and paying them.
Okay, and so I'm going to jump in here. So this is a kind of a complicated question in that there's different kinds of royalties and whatnot. So I'm going to try to point you to a blog article that really breaks this down in a little more detail. So bear with me as I try to find it. But basically, for each, every song basically has two different copyrights, one for the song that's written, which is the publishing, and one for the song that is recorded, which is the sound recording. And on the sound recording side, basically the labels collect royalties from the services that use the music, and then they pay the artist based on their contractual agreement that dictates what percentage of those royalties are paid. On the publishing side, it's a little bit different. That's the songwriter. Those are generally collected by publishers. And the publishers then usually split what they make with the songwriter about 50-50. That's the basic, simplest way I can kind of put it. But again, there's different types of royalties and there's different types of ways of collecting it. So it really depends on which royalty you're talking about. Sorry, this is just taking me a little longer than I would like, but here we go. There is a music royalties guide. I'm going to share my screen real quick so you can see this. Bear with me. All right, I'm sharing my screen. If you go to our blog up here, right, the Royalty Exchange blog, you navigate to how royalties work. The main feature right here is the music royalty guide.
Anthony, I'm not seeing your screen. Ryan, are you seeing it?
Oh, sorry, I forgot to actually share. Okay, here it is here. Okay, guessing that now?
Yep.
Okay, so anyway, this article right here, it's in the blog. It's under Royalty News and Insights, How Royalties Work. Okay, it's the first one you'll see. It's Music Royalties Guide. It's a huge overview of all the different types of royalties and how they earn. That's a basic one. But to be honest with you, the video is actually better because it's a little more updated. And the video really breaks all this down. Who collects it? Who collects what? How do they distribute it? And everything. And it's done in a pretty, I would, if I do say so myself, a rather nice, easy to understand overview way. So I would refer you to that particular blog post to really get into it further. So there's that. Hopefully that helps. Next question. Are these royalties lifetime? We addressed that, I think, already. So I'm going to kind of move past that. I love this question. Why would someone want to sell these rights? I'll start. Basically, everybody has lots of different reasons for wanting to raise money. Okay. So one of the biggest reasons is that these rights, they're paid regularly, they're paid on an ongoing basis, but the amount that they pay may not be impactful enough for the person who's collecting them, and they may want to collect many years worth of those royalty payments at once in order to make a little bit more of a forceful, maybe a bit more of a forceful impact financially on what it is that they're trying to do. Okay, so that's one big reason. They get $5,000 a month. They need $50,000, so they're going to sell it to raise around $50,000 or even more, so they can put a down payment on their house and whatnot. These artists don't have regular income that can be analyzed by bank loans and mortgage statements and things like that. So it's really hard for them to borrow money the way that you or I might that have a regular actual salary. So this is an outlet for them to do so. So that's basically one. And then the caveat to that one is that in the transition over to streaming, songwriters in particular used to get paid a lot more upfront. So when a new CD was released, everyone bought that CD. The mechanical royalties they earned from those sales were big. They were lump sums. They would get it all at once, right? With streaming, that huge lump sum they would collect upon a sale of a new release has been elongated to decades in some cases, right? And it really messes with how they were used to earning royalties. By selling them, or even a portion of them, this allows them to still kind of get what they were used to, which was that sort of lump sum payment as new music was created. So that's another. And a third common reason is basically creatively. It doesn't happen very often. It's definitely not the top reason it happens, but a lot of songwriters have been writing music for other people for so long. Now they want to sort of become an artist themselves, and they want to make their own music. So they want to sell what they've made in the past to kind of create this creative break between, okay, that was what I wrote for those people. Now I'm starting fresh and writing something new. So it's kind of a creative process for some folks as well. There's many other reasons, but those are the ones that I typically hear the most. I don't know. You guys have anything you want to add to that? You don't have to. I'm just checking. Okay. Well, anyway, that's why it's basically a financial decision, and frankly, it's a smart financial decision. Money today is worth more than money tomorrow, so that's usually why. What fees should be considered annually and during acquisition? There's really only one fee from an investor. From a buyer point of view, it's 1% of the sale price with a minimum of $500, and that fee covers our administration of making sure that you're being sent the payments that you're owed after the fact. It's a one-time fee, and it's not repeatable. And if you're an all-access member, well, there's two ways to get around it. One, if you're an all-access member, you don't pay that fee, and two, if you place the opening bid of an auction that you ultimately win, you will be rebated the amount of that. We basically will take that off the sale price so that you don't have to pay it. So those are the two ways around it. But there are no annual ongoing fees past that, right?
Yeah, that's right. I mean, the underlying distributor will have been charging generally an administration fee. And I guess the point I just want to make is anything you see on the website, all the numbers presented are net of any fees that had been collected in the past.
Okay. Another question is, how often are these royalties paid? Depends. I don't know if you guys have any insight.
I mean, it could be. It really depends. I mean, the most common are gonna be quarterly or semi-annually, but you have monthly in some cases. You have just annually in some cases. So I mean, there's various.
It's detailed on each listing. It tells you precisely what the distribution sequence is. All right. What happens if you own a sound recording right and the stock is remastered? Is the remastered record included in your royalty stream? I don't have the answer to that question.
I think Rob should.
Yes, no. I think remasters are considered essentially a derivative work. It's kind of the same track, just really tweaked a little bit. But generally, I think that those would be included in the original calculation by the record label. That it's the same work.
Well, but I think maybe what this is getting at is like the case of like a Taylor Swift who gets bent on a tape about their label selling to another entity and then wants to re-record and remaster all of their music and release it on themselves so that the old record company no longer gets her royalties.
Yeah, I mean,
in that case, it would be included.
Right. If you're using if you're using a completely different recording process and just re-recording the songs, it's a new recording. If you're remastering an original recording, that's
speaking of quality.
Right.
Yeah.
So that's a little bit different. But yeah, if someone's going out and re-recording the entire thing, they might get a legal challenge from the original copyright.
Yeah. There's going to be a lot. There's going to be a lot going on your behalf behind the scenes that you're not going to have to pay for it.
But I suppose that's possible.
Yeah, I mean it's come up with some of the disputes between artists and their labels, but I don't think it's actually happened yet. in term, I mean, it's been threatened, but it's never, I don't think it's actually been done, but I could be wrong. I just haven't seen it actually gone through. So we'll see. Um, um, Next question. Is there any potential liability exposure when holding royalties? Rob, you're up again.
As far as liability goes, I mean, I guess that's a little different than risk, right? So liability is if you are holding royalties, and you would have some sort of obligation to pay out other royalty owners. That's where you might run into a liability. Sometimes if we were to sell publishing royalties, where there are other songwriters that are owed royalties out of that, then the royalty holder or owner may have to pay out royalties. We always cut that out when we're dealing with our deals. But as far as you as an investor having any liabilities, no, really, these are passive assets. You're just collecting the royalties, and that's kind of it.
Okay. Someone mentioned they didn't understand one of our answers to one of the questions, but I don't know which one you were referring to. So if you want to retype, if you want to be more specific on what we need to clarify in the question that we just answered, because I don't know which one was the concern. And so I'll just make that statement. If you want to type in more information, we'll try to get to it. But I'm going to go to some other questions that are here. One is volume increasing? And if so, why? And are prices increasing or decreasing? So I don't know. Is volume increasing? I think maybe a little bit, just in terms of there's more formats. So volume in terms of sales, right? So volume increases based on who's coming to us as sellers. I don't know if that's necessarily increasing or decreasing. It's kind of hard to say if there's been a sharp difference. We're constantly talking to folks. So the supply chain is sort of a complicated question to answer. But basically, with direct listings, we are talking to people that would not work with us before because of the auction process. So in that respect, it is definitely increasing. Volume's increasing in terms of the offers made and the activity taking place in the secondary market between investors. That's also increasing. But we definitely have a lot of interest coming our way from artists. A lot of it is a result of the pandemic and sort of the disruption to the music industry and the live turn space that's occurred. All of those things are true. In many cases, the amount of calls that we get don't necessarily reflect with assets that are on the marketplace for a variety of reasons. Artists may have certain financial situations that disallow them from putting their royalties on the marketplace, tax liens, advances that need to be paid off, etc. In other cases, they're just not sure yet and they're waiting. So it's a difficult question to answer, but generally, I think that we've seen a lot of volume this year, and volume does, in terms of interest from incoming sellers, slowly increase. Are prices increasing or decreasing? That's one of those tough questions to answer on an average basis. I think what we've seen lately, in terms of, at least on the auction side, what we've seen is that the closing price of auctions have been above our estimated closing price, mostly, to the tune of around actually 20% in some cases. Again, it's hard to say because it's really, everything kind of goes on an asset by asset basis. But in general, we have seen people being a little bit more aggressive on some of the better quality assets that are on the auction house. And the answer, the question why could be all over the place. But I think our assumption is that with the state of the markets and the volatility, people are more interested. Well, there's two things, right? One, people are more interested in uncorrelated assets right now because they are a little bit more protected from some of the swings that we're kind of seeing in public markets, basically. And then two, I think that overall, this idea of music royalties as an investment asset has been increasing. It's becoming much more well known. We are seeing, if you want to talk about volume, we're seeing more investors coming and signing up new to our platform than ever before. I was just looking at the stats, and our third highest month of new registrations ever was just last month, and the first two that surpassed that were just earlier this year, I think April and May. So, I mean, there's a lot more interest from investors, and so that is, I think, driving a lot of this activity. So I hope that answers that question. Next is, what are the best data sources to understand what the growth decay curve of songs are in portfolios? Ryan, I'm going to kick that one to you.
So I'm not sure what you mean by data source. I mean, to develop ours and to look at ours, I mean, we've used our own data that we have collected in our databases. And just the data we've gotten over time, I'm not really aware of many other outside data sources other than like what would your typical one be? Nielsen, right? Or what's it? Media, something
Media,
like
right.
that. Yeah.
But for
So
us,
those.
basically each listing we list the the earnings average over 3 years, and there's a raw data file that if you select, you could download the entire history, and I think that would be the best source of growth slash decay data for that particular catalog. Would that be accurate, Ryan?
Yeah, yeah, you can see each one, right, and how it's kind of developed over time, and then I mean, just a kind of a pretty sample like analysis thing you do is you can break that catalog into different age groups and then just evaluate how those age groups have performed over time, and you can kind of develop a trend for how the younger age groups should perform into the future if the historical performance were to be similar to the future performance.
Okay. Hopefully that answered that question. Another one is the number of royalties offered on the secondary market increasing over time? Yes. Basically, and it will increase even more once we're able to add additional types of assets that earn from sources other than ASCII or BMI. The whole intent is for that to increase over time. Anytime any new assets are acquired on royalty exchange, they eventually make their way to the secondary market unless an investor expressly asks us not to put it there, which we're fine to do. And then even when there's sales that take place within the secondary market, if one investor buys an asset from another investor on the secondary market, that asset remains so that yet another investor can buy. We've seen assets change hands 3-4 times now. Yes, they will absolutely increase over time. All right, so those came through the comments thread, which again, a little bit harder to monitor, but I've got some new ones here in the Q&A, which is one, can you market the catalog that you've purchased? Not really. You don't. You are investing you're taking a passive interest in this catalog. You do not have the right to negotiate licensing for the asset that you've purchased. All right. You don't have that ability. You could suggest it all you like. You can put it on repeat on your Spotify if you like, but you can't like go to a ad maker, someone's making advertisements or making a film and say, hey, I own a slice of this song. I'm going to license it to you to put into your commercial. You don't have that ability. The owner of the royalties, the owner of the song, the songwriter, the copyright holder, all those people, they have the right to license those things. So the licensing comes from the copyright, not from necessarily the royalty stream. So I hope that answers that question. And then another question here: after a royalty is sold, why does it remain as unavailable on the site? Are we able to put in all metrics we are looking for in a saved filter? It's a little bit difficult. So when the royalty is sold, it's not unavailable on the site. I'm not sure that that's true. There might be a delay between the sale and then making it available again on the site, but after royalties are sold, they are in the secondary market. So I don't I'm not sure what you're referring to. If you'd be more specific in your question, I might be able to address that better. But when royalties are sold, they do remain available on the site in the secondary market. The question is, are we able to put in all metrics we are looking for in a saved filter? I guess sort of, right? We have these things called standing orders. And so a standing order allows you to say, I'm looking for catalogs at this dollar age, and I'm looking to spend this multiple for them. And then what we will do is we will match that standing order to any secondary market asset that meets the dollar age requirement that you've entered. And if your LTM offer and the standing offer meets the list price of that asset, there will be an automatic sale made. If not, they will be sent an offer which they can accept or reject. So that's on the secondary market. And the same also stands for any new catalogs that enter our system through, we have an online tool where artists who come to us connect their catalogs and we analyze them automatically. And through that analysis, if the details of the catalog match the parameters that you've set within your standing order is a match, we will present them with your offer, which they can also accept or reject before continuing. So in that respect, yes. We say all the metrics we're looking for. The standing orders are only focused on certain metrics, which is primarily dollar age and last 12 months earnings, basically. We don't have filters for anything beyond that at this time. So I guess the question is kind of, But if you're looking for, I only want, country songs or something like that, we don't have that level of filter. I had a question the other day if they can leave a standing order for a specific catalog. I want that catalog, and I want my standing order to be presented to him like every day. That's not something that we're able to do yet either. So hopefully that answers your question. And then we just had one come in. If the artist selling the royalties dies, what happens? Does the publisher record label know the assigned rights can't be taken away and were contractually sold and assigned? Robert?
Yeah, so the way that the assignment happens is you'll sign a purchase agreement with the seller, and then a letter of direction will be put in place, or whatever the appropriate assignment form is, with that distributor. So at that point, that's when the direction happens, at the point of sale. So if a underlying artist or label would pass, then those rights had already been assigned via the purchase agreement, and the distributor is already paying according to that letter of direction. So then, Royalty Exchange typically administers all the catalogs that are sold on our site. So we'll just be collecting, and then we'll be paying exactly as we had after the sale.
Okay. So that's that question. I think those are all the questions that we were going through. The Q&A thread is empty. I don't see anything in the chat thread. So last call for questions before we wrap it up. And if not, listen, thank you guys all for attending the call. There will be a replay that we'll make available once the recording is processed by the webinar service. And we'll send that out most likely later today, potentially tomorrow morning if it takes longer. So hopefully we answered all your questions. As always, if you have questions, you can send them to investors@royaltyexchange.com. We'll be happy to track down the answer for you. I hope you found this interesting and informative. And if, again, we have these every single week, usually the second Tuesday of the month. This month we did it the first Tuesday, but usually it's the second Tuesday of every month. We have these available every week in the marketplace update. You'll see a link where you can select to register. You can register in advance. You can register for as many as you like. We do cap it to 100 so we can get everyone's questions in. But basically, thank you again, and we'll see you next month, hopefully. All right, thanks. Bye now.
Thank you.